Bitcoin holders, crypto 2026. 5 levels from 0.01 to 10 plus Bitcoin. Do you think owning 0.01 Bitcoin is too small to make a difference? Look at these numbers. Bitcoin only has a maximum of 21 million coins, meaning that even in an ideal world where Bitcoin is evenly divided, there is only a maximum of 2.1 odds of owning 0.01 Bitcoin for more than 8.2 billion people on the planet. But the reality is much more scarce. By 2026, only about 13 million addresses hold over 0.01 Bitcoin, about 4.5 million addresses hold over 0.1 Bitcoin, and less than 1 million addresses have 1 Bitcoin or more. With the current Bitcoin price around $65,600, 0.01 Bitcoin is equivalent to around $656, while 10 Bitcoin is already worth over $656,000. So where do you stand in the Bitcoin asset pyramid? A beginner with 0.01 Bitcoin, a long-term accumulator, a wholecoiner who owns a full 1 Bitcoin, or a group of whales 10 Bitcoin or more. Don't take your eyes off it, because your place in the Bitcoin world may be a lot rarer than you think. Crypto Radar. To understand the value of 0.01 Bitcoin, let's first stop looking at it as a tiny decimal. By 0.01 Bitcoin is equivalent to 1 million Satoshis, the smallest 1 million units of Bitcoin. For a new Bitcoin holder to join, this is an important foundation for understanding how scarcity can affect Bitcoin wealth in the long term. And what's really remarkable is not just the number of Bitcoins that exist, but how quickly the amount of new Bitcoins that are being created is dropping. As of July 2026, over 20.06 million BTC have been mined, or about 95.5% of the total maximum supply. That means that less than 940,000 BTC will be released over the next century. In other words, the majority of the Bitcoin that the world can own has already appeared and is in the hands of someone. After the 2024 halving, the mining reward is only 3.125 Bitcoin per block. With an average block creation time of about 10 minutes, the entire network is only producing approximately 450 Bitcoins per day. If you convert that number to 0.01 Bitcoin's holdings, the amount of new Bitcoins created per day is only enough to form about 45,000 units, 1 million Satoshis per part, and after each halving, this rate continues to halve. But 450 new BTC per day are also not distributed evenly to new entrants. They belong to companies and mining groups that have invested machinery, power, and infrastructure to protect the network. Some can be sold to cover costs, while the rest can continue to be held. So people who want to accumulate 0.01 Bitcoin do not simply wait for more Bitcoin to be mined. They almost always have to compete to buy back the amount of Bitcoin that someone else is willing to sell. This is the difference between the supply that exists and the supply that is actually ready to trade. The data on the age of Bitcoin shows an even more remarkable phenomenon. As of mid-July 2026, about 12.2 million BTC, or 60.8% of the circulating supply, had not moved for more than a year. An additional 3.55 million BTC, or 17.7%, lay dormant between 6 months and a year. As such, a total of nearly 15.75 million BTC, about 78.5% of the supply, has not moved on-chain for at least 6 months. This doesn't mean that all of those Bitcoins are locked up or definitely can't be sold, but it does suggest that the majority of the supply is being held by people who haven't moved in a long time. When old owners don't want to sell, new buyers can only compete with each other on a much smaller amount of Bitcoin than the total supply seen on paper. So the significance of the 0.01 Bitcoin analysis doesn't lie in the fact that it immediately makes a person rich. It lies in the fact that the person has accumulated 1 million Satoshis in a system where the amount of new issuance is getting smaller and smaller. The majority of the supply is already held, millions of Bitcoins may be out of circulation, and the majority of the remaining coins are being held very tightly by long-term holders. Of course, scarcity does not mean that the price will inevitably rise. Bitcoin remains a highly volatile asset, and market demand can increase or decrease over time. But if the level of Bitcoin adoption continues to expand while new supply continues to be cut, the difficulty in the future may no longer be to buy a complete Bitcoin. The challenge for the majority of investors may simply be to accumulate enough 1 million satoshis, and 0.01 Bitcoin is just the first rung of the ladder. As we move up the 0.1 Bitcoin, 1 Bitcoin, and above 10 Bitcoin levels, the number of eligible addresses plummets, while the scarcity level rises in a completely different way. Before exploring the Bitcoin asset pyramid, if you are interested in Bitcoin and want to learn how to build the right investment strategy for 2026, check out the video How to Invest in Bitcoin Crypto 2026, Your Last Chance, which was posted on the Crypto Radar YouTube channel. When looking at the Bitcoin pyramid, what matters is not just how many BTC a person owns, but how many other addresses can afford to climb to the same level. And the data shows that the difficulty is not increasing steadily. Every time the target is increased tenfold, from 0.01 to 0.1 Bitcoin, from 0.1 to 1 Bitcoin, then from 1 to 10 Bitcoin, the number of addresses reaching the next threshold drops. Level 1, less than 0.01 Bitcoin newcomer to the ecosystem. This is the most popular group in the Bitcoin holders community. According to the data on the chart, the majority of Bitcoin wallets are still holding less than 0.01 Bitcoin. You have started to enter the market, but the position is relatively small. However, that is not meaningless because 0.01 Bitcoin is equivalent to a million satoshis, and owning Bitcoin itself puts you out of the group of billions of people who do not have any amount of BTC. What is more remarkable is the evolution of the line showing the number of addresses above 0.01 BTC. In more than a decade, this number increased from less than 1 million to about 13 million addresses. But from 2023 to 2026, the growth rate has slowed markedly and most of the time hovered around the 12 to 13 million region. While the price of Bitcoin still experienced sharp increases, the number of addresses that crossed the 1 million Satoshi threshold did not increase proportionately. That shows that joining Bitcoin and accumulating enough 0.01 BTC are two different things. Level 2, from 0.01 to less than 0.1 BTC serious accumulator. This is the most popular group in the Bitcoin community. In 2026, there were about 13 million addresses that owned over 0.01 Bitcoin, but only about 4.5 million addresses surpassed 0.1 Bitcoin. Taking these two numbers apart, we have about 8.5 million addresses that range from 0.01 to less than 0.1 Bitcoin. This is the largest tier of addresses that have passed the 1 million Satoshis mark. Nearly two-thirds of addresses over 0.01 BTC still stop before the 0.1 BTC threshold. In other words, about 2 out of 3 addresses that have reached 1 million Satoshis have not yet made it to 10 million Satoshis. This level can be seen as the tier of retail investors who have passed the testing phase. They no longer only own a few symbolic Satoshis, but the majority are still quite far from the 0.1 Bitcoin mark. This is where the pyramid begins to shrink. Level 3, 0.1 to less than 1 Bitcoin rare ownership group. Approximately 4.5 million addresses currently own over 0.1 Bitcoin, while only nearly 980,000 addresses exceed 1 Bitcoin. Thus, the tier from 0.1 to less than 1 Bitcoin has about 3.52 million addresses. Compared to the previous tier, the scale has dropped by more than half. More notably, of the entire number of addresses that exceed 0.1 Bitcoin, only about 22% can progress to a complete Bitcoin. Nearly 78% remain below the 1 Bitcoin mark. This shows that the gap from 0.1 to 1 Bitcoin is not only larger in absolute value, but also significantly harder to overcome. This is the level of people who have accumulated Bitcoin with a clearer level of commitment. Reaching 0.1 Bitcoin often requires periodic purchases over long periods of time, significant capital investment, or having entered the market from a lower price stage. However, 0.1 BTC is still only a tenth of the way to the wholecoiner position, and the data shows that the majority of addresses at this tier have never crossed that gap. Level 4, 1 to less than 10 BTC wholecoiner. The 1 BTC threshold holds special significance because it represents the likelihood of owning a complete Bitcoin. On the graph, the number of addresses exceeding 1 Bitcoin has increased from about 50,000 in the early 2010s to about 1 million in 2023 to 2024. However, by 2026, this number drops slightly to around 980,000 addresses, after excluding about 150,000 addresses with with more than 10 BTC. The Tier 1 to less than 10 BTC has about 830,000 addresses. This is a very sharp contraction compared to 3.52 million addresses at Tier 0.1 to less than 1 Bitcoin. Less than a quarter of addresses over 0.1 Bitcoin can own a full Bitcoin. The gap inside this tier is also huge. An address that owns 1.1 Bitcoin and an address that owns 9.9 Bitcoin are placed on the same level, but their assets differ by almost 9 times. And of the nearly 980,000 addresses that exceed 1 Bitcoin, only about 150,000 addresses can reach the 10 Bitcoin threshold. Level 5. 10 Bitcoin or more, the elite Bitcoin class. This is the rarest level in the classification system. Holders of 10 Bitcoin or more are usually early participants, long-term accumulators, businesses, or individuals with high asset values. At this level, the difference lies not only in the number of Bitcoins owned, but also in the ability to access an extremely large portion of the asset with a fixed supply. As the price of Bitcoin increases and the amount of liquidity supply decreases, buying 10 Bitcoin can become almost out of reach for the majority of individual investors. According to the chart, the number of addresses belonging to this group increased very quickly in the early period of Bitcoin, from about 50,000 addresses in 2011 to over 140,000 in 2016. However, since then, the trend has changed completely. The number of addresses over 10 Bitcoin mainly hovers between 145,000 to 157,000, and by 2026 is only about 150,000 addresses. When the 5 levels are fully matched, the Bitcoin pyramid in 2026 has an estimated 43.9 million addresses with less than 0.01 Bitcoin, about 8.5 million addresses with 0.01 to less than 0.1 Bitcoin, about 3.52 million addresses with 0.1 to less than 1 Bitcoin, nearly 830,000 addresses with 1 to less than 10 Bitcoin, and only about 150,000 addresses with 10 Bitcoin or more. This pyramid does not prove that people who own a lot of Bitcoin will definitely be rich in the future. It also does not accurately represent the number of individuals, because blockchain addresses are not synonymous with people, but it does show an observable truth. The higher the balance thresholds go, the faster the number of addresses left is going down, and the gaps between tiers are getting harder and harder to overcome. So the important question is not just how much Bitcoin a person has today. The bigger question is, if demand continues to expand while the top of the pyramid is almost impossible to grow rapidly, how will the position of each of these levels change in the asset system of the future? Let us find the answer at the end. Historically, wealth has often been measured in cash, real estate, stocks, or business ownership, and Bitcoin investing offers a different perspective. Assets are not only valued by their dollar value, but also by their ownership in a system with an absolutely limited supply. A holder of 0.1 BTC always owns a fixed share of the total supply of up to 21 million BTC. The market value of that share can fluctuate, but it cannot be diluted by issuing more Bitcoins. This is an important difference from fiat money, where the purchasing power of savings can decline over time due to inflation and expansion of the money supply. The involvement of financial institutions could make this trend clearer. As hedge funds, businesses, asset management companies, and long-term investors alike seek to allocate capital into Bitcoin, they must compete to buy back the amount of BTC that current holders are willing to sell. Bitcoin cannot issue more shares as businesses, nor can it be mined faster to meet demand. New supply continues to decline after each halving. Bitcoin can also change the way people access scarce assets. To own real estate, investors often need large amounts of capital, the ability to borrow, and complex legal procedures. Besides BTC, Bitcoin is highly portable. Bitcoin can be transferred over a global network, and ownership is verified directly on the blockchain. This feature could make Bitcoin a more resilient form of reserve asset in the digital economy. However, scarcity does not mean that the price will inevitably rise. The value of Bitcoin still depends on demand, market trust, regulatory, and the ability of the network to sustain its role. Owners also face large volatility, the risk of losing their private keys, fraud, and errors in custody. So Bitcoin could redefine wealth not by turning every person who owns it into a millionaire, but by creating a new asset standard, fixed, verifiable, and hard to dilute partial ownership in a global network. If Bitcoin continues to gain widespread adoption and acceptance, 0.01 Bitcoin could become a significant significant reserve. 0.1 Bitcoin could become a rare position. 1 Bitcoin becomes a hard asset to reach for the majority of workers, and 10 Bitcoin could be mostly in the hands of wealthy individuals and large institutions. So what level are you on in the 5 Bitcoin asset classes? Should you buy Bitcoin at the moment? Share the answer in the comment section. Don't forget to like, subscribe to the Crypto Radar channel, and turn on notifications to keep up with crypto news, Bitcoin today, Bitcoin news today, Bitcoin updates, crypto update, and cryptocurrency news. Please note that the content of the video is intended to provide information and education, not investment advice. The cryptocurrency market is risky and highly volatile. Do your own research and make the right decisions. Thank you for watching the entire video. Goodbye and see you in the next video.